In the metals market today, huge rally in copper, very big rally from opening price to the high price. This is the biggest one-day jump we've seen since January, rising about 9 cents in the COMEX copper contract. Again, that was a very dramatic move. Lost most of it in toward the end of the day, but earlier in the day we were up over 3%. Ended up the day right around 1.5% higher, a little bit less than that as we ended up settling in. China demand was part of the reason. Chinese demand has been slipping as their economy slipped, and copper mines in Chile announced today cumulatively that they were going to reduce production. So you would think that China demand slipping would have been a sell-off in copper, but that's what's been happening in copper all along. Copper mines in Chile announcing that they were going to cut production, and they cut it dramatically. Chile being the largest producer in the world, the largest miner of copper. If there is any sort of progress on a U.S.-China trade agreement or a deal itself, or any sort of increase from China, that supply is not going to be there. So it's definitely speculators and some end users getting ahead of the hedging cycle to get involved in copper. That's what this jump was. But again, that reaction to weak demand was something that went along with what's been happening with the dollar and what's been happening with the view of the Fed. So a slow grind in the dollar today actually is part of the reason that we ebbed away a lot of that copper rally in toward the day. The US dollar index actually rallied all day long, barely pulled back at all. It wasn't a dramatic rally from a percent change on the day, but it was a grind all day long, ebbing away that copper rally. As I mentioned multiple times, dollar and copper have an inverse relationship, and this was in part due to the probability of the Fed rate cut going from a probability of only about 5 or 10% that it was going to be 50 basis points at the end of July, all the way up above 40% on the CME Fed Watch tool. Part of the reason the dollar rallied is that people think that's going to be ebbed away, as some of the staff of New York Fed President John Williams, who said yesterday that the Fed needs to act aggressively to not have to go into some sort of catch-up rate cut cycle down the road. His staff clarified that and said that he was actually looking more at about 20 years of research rather than referencing what the Fed is going to do now. That brought in this dollar strength, that brought in the short covering, and that hit copper later in the day.